our previous class, that is descriptive analytics of financial statements. In that first unit, introduction to financial statement. In that we have completed subunit 1, that is meaning, definition and key features of financial statements. And in subunit 1.2, we've seen that what are the major types of financial statements. So today we will proceed with the same. So I'll be starting with the subunit 1.3, merits, demerits, and uses of financial statements. And also I'll be moving to ahead for second unit called elements of financial statements. In that, we are going to briefly get introduced about what are the elements we have, how they will be affected our business, and after that in subunit 2.2, that will be the pro forma, or else we can say the format of those elements. Okay, so I'll be sharing my screen. I hope my screen is visible. So let us start subunit 1.3, merits, demerits, and uses of financial statements. So first is uses of financial statements. So this every business, as we know that every businessman or every organization, every company needs to prepare the financial statements. So which will be of written records of the companies or of businesses or any organizations day-to-day activities related to the transactions, that is financial transactions, and company performance in the sense the financial performance, that what a company is behaving or how it is performing in its financial manner. So that will be consisting of financial statement. So how we can take a use of these financial statements. So financial statements will be helping in the bridging the gap in management. So what it makes a bridge the gap in management and between the owners. So what will be the owners and management means here? Management in the sense the persons who are managing the business, the persons who are carry forwarding the business, and the owners are who are invested their money, who are looking for a benefit and a success of their business. Okay, so they will be owners will be asking for what a company did for an entire year, how you managed the things, what all you managed. So how much my company is earning or how much our company is earning. The managers, sorry, the company owners or the business owners or the investors will ask. So here owners are, they may be individual persons or a group of persons or a stakeholders, we can say group of persons in the sense variety of equity shareholders, preference shareholders, debtors, and many more other peoples are there who are asking for that what is the company is performing. So what will happen here, this financial statements will help us to show that what is the gap. Okay, what is the gap? That company performance is a gap between the management and the owners. If there is any conflict between management and the owners, that will be sorted out by the this financial statement. So this financial statement will be helping the management and as well as the owners. They will, whatever the conflicts or whatever the misunderstandings or whatever the gaps will be there, that will be fulfilled by this financial statements. Next is availing credit from lenders. So what it means is here. So availing credit in the sense you may seen that in your you may seen that you may heard about the banks and financial institutions, government agencies, and many more investors, right? So if a businessman is facing any problem, okay, so what he will do, he will take a loan or he will take a credit from the banks or financial institutions. As in our normal term, we call it as a loans. Okay, so when we approach a bank, so bank will be looking for that, or any financial institutions or any individual finance houses. So they will be looking out that what is your company's financial statements, because as I can say, I can give you an example that, okay, so in your family, your father is there or any of your family head is there who is working. Okay, so he had a one financial problem for this month. Okay, so where he can't run with the July month expenses. So what he will do, he will think of to take the credit in the sense personal loan. So what he will do, he will go for an approach to a bank. So when he approaching a bank or a financial institutions, in that a bank or financial institutions or the person or authority will be asking you for that, what is your income source, please show us what is your income source. So then what that person will do, your family head, he will show his business. If he's having a business turnover he will show, or else if he's having a earning from salary, okay, if he's having earning from a salary, so he will show that what is their monthly salary slips. So he will hand it over that these are my monthly salary slips. So this is how I am getting my income. So can you give me a loan? So then they will evaluate, they will check that what is the credit score, and based on that they will give you the loan. Okay, likewise, same formality will be happen in the business terms also. So what will do, a businessman will go and approach for a bank, okay, or any financial institutions. So that financial institutions owners or authorities or the persons, what they will do, they will ask you for the, show me the sources of your company, so how you are earning your business. So for that what they will do, they will ask you that what is your financial statement, show me your financial statements, how they are doing, how your company performance in a financial matter, whether you are earning a good sound economic, whether your company is having a proper financial statements, whether it is a properly earning profits or not. So based on that you can avail the credit from the lenders or else banks or financial institutions. Okay, so the next is use for investors. So use for investors in the sense, so it will helps to you investors to that understand how we can, whether we can invest in that company or not. Okay, how much we can invest, what amount we can invest, at what extent we can believe in this company, how much it is performing its revenue, how it's generating its revenue, how it is performing in a business, how it is performing its, what is its performance nature. Based on all these criteria they will look into that. So for this, to analyze a company's complete details, so investor what they will prefer, they will prefer for the financial statements, where they can see that how this company is managing the conflicts or any kind of criterias or any kind of problems will be there, how this company will be facing, what are the major sources, how it is generating its revenues, how it is facing with the expenses, how it is facing with the uncertainties, what are the uncertainties a company earn. So these all information will be there in a financial statements, and also it gives a clear picture about, it gives a clear picture about a company, that whether for an investor when he invests, so whether he will be going to get a greater return or not, or proper return or not. Okay, at what extent he may get the return based on the previous year performances or the last year performances. Based on this, the financial statements, a company can go for or an investors can go for any company. Investors may be a person or a group of person, any business, any individuals. So they can become a investors who are ready to invest, who are having a sufficient fund and who are ready to invest. Okay, so they can come and invest in the companies, and they can earn the they can get a return on the that investments, right? So this is how the uses for investors. Next is use for stock exchanges. So very important one. So it will be, this financial statements will be used for the stock exchanges. So how it will be relevant to stock exchanges? So you may see that there is a stock market now. Everyone are running and rushing towards to save their savings. They are not saving in their bank, and they are saving in the stock exchanges. They are investing in the stock exchanges. They are dealing in the share market. So what it means here? So to what we can say, to list out your company in the stock market, to list out your company shares in the stock exchanges. So then what you have to show, you have to show your financial statements. In that financial statements, what it will be, what it will be having, it will be having the complete financial structure or a company's performance, which will be available in the financial statements. Based on this, the stock exchanges or the stock exchange houses, they will think that, or the regulatory body of stock exchanges, they will think and they will look into that whether to list out this company or not. Okay, so for example, you can see nowadays Tata is earning more, Tata is listed. Okay, and Infosys is also listed, Wipro listed, and Adani Power, it is now become one of the most highly invested company because of what it is having the more good performance in their financial statements. So by this, what will happen? It will help us to list in the stock exchanges, right? Next is information on investments. So information on investments in the sense, investor can get that how much he is getting the returns, means what is his investments were used for. Okay, so in investments, so you can see that if an customer or if an investor is there who is coming and investing in your company for 100 crores. Okay, if he is investing 100 crores, he will be checking out that how much you are earning from that, what you are using for it. Okay, so I can give you an example that when your parents will give you 100 rupees, so they'll ask you that what you did for 100 rupees. Give me the proper calculation, what you did. Give me the proper account for that investments. What are you done? What are your activities you did for the with that investments, right? So likewise, here an investors will be also can get the information of their investments, that what a company did with their investments. Okay, so these are the uses of financial statements. Next, we'll go for the merits and demerits of financial statements. So you can see that there are lot of merits and very lesser demerits are there. Okay, so merits and demerits are what? Or advantages or disadvantages, pros and cons are the two faces of a same coin. Okay, both are interdependent. In every advantageous work, every advantageous statement or every advantageous thing will be having, or invest any kind of process will be having that disadvantage also. Wherever the positivity is there, there is a negativity is also there. Likewise, there is a merits, there are also a demerits. So let us see that, let us understand what are the merits in a financial statements. What are the merits of financial statements? So first, what will help? It will help us to determine the ability of a business to generate cash and the resources and the use of that cash. Okay, so it will helps us to determine is in the sense to predict that what a business can having ability, how much it is having ability or capacity to generate cash, how much we can generate the cash, liquid cash, and what all sources we can use, how we can get the cash, and how we can use that cash in a proper order, right? And also it will determine whether a business has a capacity to pay back its debts or not. So it is also helps us that whether this business is having a capacity, whether this business is having that much of ability or not, to that when however it gets a debt, whether it can pay back or not. So that will be analyzed through the financial statement. Next, it will helps us to track the financial results on a trend line to spot any looming profitability issues. So if any kind of profitability issues will be there, any kind of if any kind of any kind of looming profitability issues will be spotted out, so it will keep track on the financial results that where we are having the issues, where we are facing the problems, how we can sort it out. So that will be given by the financial statements. Next is to derive financial ratios from the from the statements that can indicate the condition of the business. So it will what? It will derive the financial ratios. Ratios in the sense how much we have a liquidity ratio, how much we have current ratios, how much we have current assets, how much we have current liabilities, how much we have the liquidity, how much we have the debt. So these all will be that will be indicating the condition of a business, that how what condition our financial ratios are there, or what condition our business will be facing. So that will be given by the financial statements, and it will also helps us to investigate the details of a certain business transactions. So if we are having any doubts, if we are having any issues or conflicts or any complaints on the some certain business transactions, so we can go for an investigation of that details. So how we can how we are going to how this business transaction happened, where this money went. Okay, for example, if any reimbursement you did, and if you are having a doubt on that, so then you can go for a investigation that how you did reimbursement. So what all the criteria are there, what are the necessities, so what are the documents relevant supporting to that, and also as a outlined in the disclosures that accompany the statements. So it is also what it will be outlined the disclosures. So how you are going to, that will be accompanied, that will give the proof that how you are going to disclose that business transactions, right? So this is about the merits of, so this is also helps in the financial statement. Next is the last merit is to use as the basis for an annual report, which is distributed to a company's investors and the investment community. So by this financial statement, what we can do is we can get the we can use it for a base as a base for the annual report when where every company, every business or every organization will be preparing an annual report where there will be a base of a financial statement, certain reported certain documents will be there. So in a business there will be a financial statement which will helps us to which will become a base for an annual report which will be distributed to the company's investors who are our regular investors are there, whoever are there regular investment community are there, for them we can distribute it so that we can show that okay, this is our financial statement. So this much on your investment, this much you earn the returns, so this percentage of return you earn, so we can disclose certain percentage of profit to the all the investors, right? So where we can have the more investment in our business, where we can achieve more and more success in the business. Okay, so these are the merits of financial statements. Next comes demerits of financial statements. So what all demerits of financial statement means? So demerits of financial statements are that it is based on the historical data. So this financial statement is require complete historical data. Based on that, we are going to record the financial statements. Next, it is based on the market pattern. So whatever the new trends will be came in the market, so according to that, it will go for a preparation. It will having a proper market pattern where it will be released. Okay, and next at a one-time analysis. So we can analyze it only one time. We cannot analyze it in every time. We can use it as a one-time source. And next, based on the personal judgment. So we can say that whoever preparing the financial statements, so they can disclose the financial transactions or business transaction based on their personal judgment. They can do them. They can do certain times. They can do the malpractices or any kind of frauds can be happen. Okay. And next, interim reports are produced by these financial statements. In between, only within while running the business within a year, we can produce the report also. So these are the major demerits of financial statements. Okay. So next, we'll go for the second unit called as the elements of financial statements. Let me share that screen so we can further proceed for the elements of financial statements. I hope my screen is visible. So this is second unit, elements of financial statements. In this, we are going to study about subunit 2.1, what are the elements of financial statements and the elements of financial statements are. So what all major elements are there? So what do you mean by elements of financial statements? The elements of financial statements are the general groupings of a line items contained within a statement. So within the proper statement groups, what all the general groupings are there, general subheads are will be prepared. So these grouping will be very depending on the structure of the business. So if it will be depending on the structure of your business, it will be contained. So certain contents will be differ. Okay, and thus the elements of the financial statements for a profit business vary somewhat though from those incorporated into non-profit businesses. So there is in business there are two kinds of businesses are there: profit business and non-profit business. Profit business in the sense a normal manufacturing company which will manufacture goods or services, and non-profit organizations or non-profit businesses in the sense any kind of charitable trusts, any kind of NGOs, or we can say education institutes. So those all are what the non-profit organizations. Okay, so based on this, there will be a and which will be having no equity accounts also. Okay, certain charities or we can say NGOs, non-government organizations, those will be having, those are not having any kind of equity accounts. So there we can see the elements of financial statements. So these elements will be depend on the company's structure. So let us see that there are three various elements. One is the elements of financial statement. In that, first one is cost sheet of the business, trading account and income statements, cash flow statements. So these are the three major elements. Okay. So first one is cost sheet of the business. So what do you mean by cost sheet of a business? A cost sheet is a statement that shows the various components of a total cost for a product and shows the previous data for comparison. So it will be shows that it is a statement which is prepared by a business person. So which will shows about the various components of a total cost. So there are various components will be there for a product, like if a bike manufacturing factory is there, or if any bike manufacturing factory is there, so for that what all components will be applicable. So for a bike, what all components will be there? First one is wheels. Okay, two wheels are required, handle is required, accelerator, brake cables, clutch, gearbox, brake, and seat, and we need headlight, indicators, right? And many more other things we require. Suspension, shock absorbers, those all will be required. So for that product, what all components will be required, for that whatever cost we are bearing. So that will be called as a total cost of a total cost for a various products. That will show the previous data for comparison. So what will be the previous data for previous model what we are using? Okay, what is the cost will be applicable for that previous model? So for this new model, what all cost will be applicable? What are we made the changes? How we are reducing the cost, or how it is increasing the cost? So that will be complete idea will be given here. So you can decide or reduce the ideal selling price of a product based on the cost sheet. So we can also we can also determine, or else we can also deduce, in the sense we can also think of that what is the ideal selling price of a product on the based on the cost sheet. So we can also determine that what will be the ideal selling price. Okay, comparing to market rate, what will be the and predetermined ideal selling price. For that, how we can fix it. Okay, a cost sheet document can be prepared either by using historical cost or by the referring to estimated cost. So this cost sheet will be what? It is a document which can be prepared either by using historical cost or any kind of estimated cost we can also refer. Okay, so a historical cost sheet is prepared based on the actual cost incurred on a product. So how an historical cost will be prepared? Historical cost sheet will be prepared on the actual cost. So whatever in reality, whatever cost we are incurring, so based on that for a product, so that for based on that this cost sheet will be prepared. And estimated cost sheet on the other hand is prepared on the basis of estimated cost before the production begins. So what will be the estimated cost? So just like before manufacturing, what all cost we are going to have. So some predetermined cost will be applicable for that. So when production starts, when before starting the productions, certain cost will be estimated. So that will be the estimated cost sheet. Okay. So next is, this is about the cost sheet of the business. Next we see that what are the, sorry. Next we see that trading and income statement. So trading account and income statement, it is very important one. A business need to prepare a trading and income statement first before moving to the onto the balance sheet. So before going to the final statement, first we need to prepare the trading account and income statement. So whereas trading account and income statement will be what? Those will be useful in identifying the gross profit and the net profit of that a business that will be earning. Okay, how a business is earning profit, how a business can earn the net profit or gross profit. This will be identified this trading account and income statement. Okay, next is cash flow statement. So as I discussed, so the cash flow statement is what? It is a financial statement that will provide the aggregate data regarding the all cash flows of a company. Sorry. So it will be completely giving ongoing operations where a cash inflows will be received by a company, and also where we are bearing the expenses. So ongoing, while on the basis of ongoing operations or ongoing activities of a business, where we are cash inflows are there, where the cash outflows are there. So where we need to bear that, this all will be presented by this cash flow statement. So these are the elements of financial statements. I hope you all understood. You all understood the point. So we'll wind up the class here. So that's it for the today. In next class, we will begin with the subunit 2.2, that is with a demo or the format of these elements. Okay. Thank you for watching. See you all. Good. Thank you.